In this video, discover 5 actionable takeaways for your trading in 2023 to thrive as a trader. Warning, ignore this savvy trading advice at your own P&L peril. Watch at the1LanceB, the number one trader at a prominent prop firm in back-to-back years, give you 5 actionable ideas to propel a trading year that will help you break out. I'm Mike Bellafiore, and we are a long-standing proprietary trading firm in New York City with numerous highly successful traders, almost all of whom started their trading careers with S&B. All of us at S&B hope you find this channel to be a wonderful place for you to learn and grow as a trader.
Today I'll be presenting 5 actionable takeaways for 2023. I'm Lance Brightside, and you can follow me on Twitter at the1LanceB for trading advice and more. I know what you're thinking. You had a really tough year. 2022 was very difficult, and you're feeling a little beat up right now. I hear ya. A lot of traders of all skill levels struggled. I know 7, 8-figure traders that had a really tough time adapting. This job is just extremely difficult. So I hear ya. I've been there. I've had my tough years. I've had my tough months, my tough days, everything. But the year's new. It's time to dust ourselves off, learn from the past, and mentally reset for 2023. These 5 actionable takeaways will help get you started on the right foot. So step 1, you need to be doing a 2022 review and setting 2023 goals. You need to be honest. How long have you spent reflecting on the last year and designing your goals for the year ahead? It's so important to do this. I've already tweeted a slide deck with advice for how to set goals and how to do that review. We've also just produced a video on the whole topic that I highly recommend you use because this is a non-negotiable practice. You can complain how bad last year was, but not take the time to study and learn from it. As I always say, if you're going to pay the tuition, you might as well learn the lesson. The video I produced, it has all the methods that I use with my pods. It's got exact instructions for you to follow step by step. That's how you need to start off this year and start it off right. Next, for step 2, one of the biggest things that came up in all my meetings, so I've probably had maybe 30, 40, 50 traders I've met with doing these annual reviews, and one of the most common ones across traders, whether independent, working for a firm, new, old, it is all about adapting more proactively. So one trader that I work with, he had this very important line, and he said, I was spending so much time trying to do damage control on my strategies that weren't working as well that I didn't see the big picture and move to where I needed to. I had never traded CPI before and had never made a plan for doing so. And I think it's so representative of what a lot of traders struggled with. They had their preconceived notion of what they had been doing, what had been working, and actually working quite well in the banner years of 2020 and 2021. So when 22 was different, almost from the get-go, people kind of struggled and were stubborn to adapt, and especially if they were ingrained with certain strategies, they didn't ask, where is the broken slot machine? And one other thing that came up on that call is he very aptly made the point, Lance, I've never traded CPI before. I never had a system or a game plan for how to trade it. And my answer was, well, guess what? Neither did anybody else. The truth of the matter is so often the market is changing and adapting, and that theme for each year often hasn't been seen before. Nobody had a playbook for meme stocks. Nobody had a playbook for some of the COVID markets we saw. And even prior to that, when the market was macro driven based on the Trump trade tariffs with China, that was another type of market that required a certain playbook. And the real big theme of last year was CPI, moving the market 3, 4, 5% sometimes on those headlines. And those that did best last year recognized that, and they knew they had never traded this before because CPI normally never moves the market that much. But what they did is they were quick to adapt and make that strategy and develop that so that come year end, they were really sizing up and knocking those home runs out of the park. So one solution we made for this with him is having weekly, monthly, and quarterly reviews, so you don't allow yourself to go that whole year without recognizing that type of thing. Another best practice is having just review calls with other traders. I think a really, really good habit is to do a monthly dinner or something, or a monthly call, if virtual, with kind of people in your pod or traders in your community, and it's going to help you so much find like what are people struggling with that I should be avoiding, and what are people capturing that I really need to hop on the train for. Another thing for those that are independent is just searching FinTwit. Who are the traders that are making money? And assess it with an open mind. What are they doing? What is the stuff that's in play for traders out there? The other big thing is Shark here at SMB. He said it best in his goals for 23. Too often P&L goals that are going well actually cause lack of motivation or an increase of pressing too hard. Too often goals are written out January 1st and then are tabled until the next year. I want to be more fluid with my goals and my process by reevaluating them each quarter. And it's so important because this allows you to catch yourself from any bad habits before they spiral too out of control. It allows you and positions you to be dynamic and adapt with the year as it unfolds. So that's the big step 2. Step 3 is back to process fundamentals. So really probably the best question I received all year, it was actually from a brand spanking new trader who is a trainee at SMB. And he asked me, Lance, all I ever hear you talk about in some of these monthly calls is the need for a lot of these traders to go back to basics and go back to fundamentals. So I don't get it. If these are so important all the time, regardless of the market, why do people ever stop following the basics? What a question that is. It's so innocent and so simple, but it's really quite profound. And so why is it? Really, the reason is, in my opinion, is that so often what happens is you have habits that lead to your success. And then during that success, while you experience it, you then start to get complacent and stray from those habits or think they're not necessary. You don't think it's necessary to do a daily report card. You don't think it's necessary to collaborate. You don't think it's necessary to do your pre-market prep. And what happens then is, even though you're experiencing success, you stray from those fundamentals, and as a result, your P&L and your performance then starts to slip. As James Clear from Atomic Habits says so nicely, your performance is a lagging indicator of your process. And your process is going to be a leading indicator of your performance. And that's so evidenced by that exact thing. And so I would ask you, what is a routine that has led to periods of success for you? And even more importantly, I've been challenging the traders. What is a routine that you can sustain so that you don't follow that boom bust cycle? What is the bare minimum you can commit to every single day you trade? Who is going to be the trader that sends out 250 DRCs to their pod because they do it every single day? Who is the trader that makes a routine so consistent that when they're stressed, when the market's volatile, when it's slow, it's their foundation so that every day they don't miss it? And then how can you make that journey and that routine more fun? Maybe it's collaborating with others. Maybe it's doing a monthly review dinner with your friends. So here are some solutions that I've seen. Doing those dinners like I mentioned, increasing the collaboration, and also just trading less to reserve mental capital and focusing on those easy money trades. Those really help you just stick to the basics when you're staying in your lane. And so then step 4 is focus on the long game. And I think Bella said it so well in this clip that I'm now going to show you.
To all the traders that are struggling this year, let me offer some perspective. Over the course of 10 trading years, 2 years will be hard. 3 years will be good. 3 years will be very good. 2 years will be great. During those 2 hard years, you may want to quit. You may want to make decisions that ensure you make the most during those 2 hard years, not considering what is best for the other 8. As Lance Breitstein, a trading mentor on our desk, says, the hard periods are part of paying dues to be around for the good years. They refine us and help us be our best to maximally capitalize on the good years. The key is to sit in that trading seat for those 10 years, as long as you're making progress, and to not make poor, short-sighted decisions during those 2 hard years that will cost you millions, perhaps even tens of millions, by missing the very good and great years. How do you sit in your seat for 10 years? Instead of focusing on today's P&L or this month's or this year's, focus on doing what you can today to ensure your best results over the next 10 years.
So what Bella speaks about is something I found in my own career. Those years of awesomeness are all founded in the years when you struggle and you refine yourself and you know that you have the grit and resilience to survive anything, right? And so many traders right now, we might be in for another year or two of really difficult trading. But guess what? I like that because it weeds out the traders that don't have it in them. So many people thought that they're the best day trader because they had success in 2020 and 2021. But that wasn't, everyone's a genius in a bull market, as they say, right? But the reality is that this type of year in 22 and potentially this type of year in 23, these are the years that define you. They define how resilient you are. And I even posted a wonderful clip of Rich Roll saying, to get really good at anything takes a decade. So who are the people that are in this for the long haul? Who is in it for the quick, easy buck? And let's say goodbye to them because trading is never about that. So the people that psychologically struggled this year, so many of them were most anchored towards an expectation for how they should have performed in 22. The people that most struggled were the ones that did best in 20 and 21 because they thought that growth would keep on sustaining. But the market changed. It didn't demand or reward you for pushing your size and growing. It rewarded you for being nimble and adapting and knowing to be more selective. But that makes you better. So the bright side of all this, a crappy 22 resets all your expectations. So you're starting from the ground level and you're going to be mentally ready to knock it out of the park in 23. As Ted Lasso says, be a goldfish. Learn what you can from last year, but then let's just move on. Let's attack this with a fresh mind and a fresh spirit. Then finally, the biggest thing I've heard from so many traders, far and away, this is the number one piece of feedback that has changed people's years. You need to find your pod. If you are out there trading on your own, you need to find that community. How are you going to do it? Attend Traders for a Cause in 2023 out in Vegas. Use FinTwit to help find like-minded traders. I even posted a thread of people looking for pod members that you can reply to. And ultimately, find what is right for you. Some people love being on Discord and trading with others to help spot more opportunities all day. Others just want to do weekly or monthly or yearly review calls. Whatever it is, something is better than nothing. And I can't urge you enough to find people that will make you better and challenge you and hold you to a higher standard. Not everyone operates the same way, but I can guarantee you all the work and effort of finding a pod will be worth it. Trading's hard enough, and you're going to make it 10 times harder on yourself if you are trying to do it all alone. So in review, here are the 5 steps that I think are most important for you to find success in 23. First of all, review your 22 and then set goals for 23. Develop a system to adapt more proactively in 2023, and then get back to the basics. Focus on the long game and have that 10-year picture in mind. If you're truly identifying as a trader, you're being a trader for life. It is not something we just pick up when it's hot and leave like a casino game. This is a real job and it is a career, and you need to treat it professionally like that. And finally, and most importantly, I wish you the best in finding your trading pod for 23 that makes you better and you make everyone around you better as well. Good luck, and let's see what this year holds for us.
Do you want more actionable trading ideas from Lance to improve your trading? Watch the video Losing Money Trading. Do this before it's too late from Lance appearing on your screen right now.